Welcome to Bazaar Morning Call. Plenty of stocks to talk about this morning, so let's get straight to it. First up, NTPC is on our radar. Vivek is here to give us the latest on that. Vivek, good morning.
Well, good morning. NTPC, number one, the results largely in line operational. But what the street will take positive cues from is the fact that the company has given very strong commentary as far as capex is concerned, as well as thermal capacity addition, as well as ordering is concerned. Now, first, let's take a look at the results itself. Revenues high by almost 7.6% on a year-on-year basis, coming in a little over 47,622 crore mark. EBITDA high by 19% on a year-on-year basis, and margins coming in closer to the 30% mark this time around. Profitability high by almost 26.5% this year. Now, talking about the conference call, the company has given quite a lot of positive commentary, especially in terms of the thermal capacity ordering. So the company is now targeting new thermal orders of close to 15.2 gigawatt, in FY25, FY27. The expedited timelines also have been given by the company for award of pipeline of 10.4 gigawatt to be awarded in FY25. Earlier, the market was working with a figure of just around 4.1 gigawatt. So that's a large jump up. More importantly, something that the street has been waiting for quite eagerly is the listing of the renewable business. That has also been expedited, and the company expects this particular renewable energy arm to be listed in October, November of this year itself. And lastly, thermal power guidance for commissioning is another 2.8 gigawatt in FY25 and another 1.5 gigawatt in FY26. So strong commentary coming in, number one, from NTPC, and also positive read-through for other capital good companies as well.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Ekta. Ekta, how were Divi's Laboratories numbers?
Well, actually, it was a good set of numbers. It was a strong recovery that Divi's Labs reported. Revenue was up around 18%, margins 31.7%. It recovered to over 30% margins after 5 quarters. Margins were 33.5% last in Q2 of FY23. Now, the profit also came in at around 538 odd crores, and Q-on-Q as well, there was a margin improvement. Now, the commentary from the company was that the margins were maintained despite a price fall in APIs due to the backward integration which is undertaken by the company, plus higher volume share. With respect to long-term supply agreement with one of the innovative customers that they have, they said that there's going to be a capex of around 650 to 700 odd crores. And I was just reading an additional point with regards to the GLP-1, where they said that they're only going to be looking at the KSM, key starting material or basic amino acids, when it comes to GLP-1. So maybe that's not going to change the projection too much. So that would be a key monitorable for Divi's going forward. Cash on books stays strong at around 3,200 crores at the end of FY24. Though the numbers were strong, there are some analysts who are a little skeptical because of the quarterly fluctuations that you see in a business such as Divi's. That's probably the only sore point this time.
Right. Ekta, thanks very much for that. Well, let's move on to United Spirits, which came out with earnings as well. Mangalam is here with details. Mangalam, morning.
Well, good morning. So those results were largely in line with a lot of green tinges, though. So if you look at the revenue for United Spirits in the fourth quarter, just under 2,800 crores, a little better than street expectations of 2,650 crores. The EBITDA was a tad shy at 334 crores. The street was working with a number of around 350 crores itself. But the net profit at 241 crores was largely in line with expectations of 247 crores. Now, in the net profit itself, there were a couple of factors. One, on the way down was, the exceptional loss that came in at 31 crores due to supply chain restructuring. But it was buoyed higher by about 111 crores of other income. This compares with 18 crores same quarter last year. The key positive this time around was the prestige and above volumes came in at 3.7%. The street was working with a number of about 2 to 3%. Even the popular business, the volume growth came in at 4%. The street was working with a flattish sort of number, anywhere 0 to 1% sort of move coming in out there. And the gross margins, which most on the street were expecting flatness quarter on quarter, has seen an increase both year on year and quarter on quarter, telling you things are improving. The management con call is at 3:30 today. And out there, the important thing to watch out for would be demand in the first quarter, given the election-related disruption. For now, expect the stock to open in the green.
Okay, thanks a lot for that. Aurobindo Pharma also was a good set of numbers. Results beat street estimates. Ekta is back to tell us more about that. Ekta, over to you.
Well, yes, revenue was up 17%, margins 22.1 versus 15%. Street was anticipating 21% in terms of margins, and the profit 900 crores plus. This is despite a one-time exceptional of 122 odd crores. US revenue was $432 million. The street was working with a range which was quite wide. It came in at the lower end of the range, and it was lower Q1Q. So that was probably the only sore point. Specialty and injectables business was at $104 million, which is 24% of sales. Growth markets were up 49%. So there were a lot of other segments which really aided Aurobindo this time, despite the US coming in at the lower end of the range. Now, this news which could be the dampener is that the company's Unit 3 of Eugia Pharma Specialities is classified as an official action indicated status, but the street was largely anticipating this, considering that the 9 observations were pretty much factored in and they had stopped manufacturing temporarily, etc. And hence, the possible worst case scenario was already factored in for Aurobindo. Call is at 8:30 a.m.
Okay, we'll await more details from the call, but Bosch is the other one that we're looking at this morning. Good set of numbers on the operational front, actually. So I'm going with green over there. The top line growth is still in low single digits, so that is a bit of a dampener. I mean, it's been a 4.2% top line growth, but the margins have improved quite a bit. So it's the second consecutive quarter of 13% plus margins for Bosch, and that's something that the street will definitely like. The margins coming in at 13.2% versus 12.9% year on year, and the net profits have gone up about 41% at 564 crores. The company has also recommended a final dividend of 170 rupees a share. We're awaiting more details on from the presentation, which hasn't been uploaded yet, on what the growth has been in the mobility business, which has been a big driving force for them. So more details awaited on that. But for now, I'm going with green on Bosch.
Okay, all right. Well, but Ekta has had a very, very busy weekend. She's also tracking Torrent Pharma and Glenmark Pharma. Ekta, tell us about those two numbers.
Well, yes, Glenmark, again, the call is at 8:30 a.m., so it could swing either way based on the commentary from the management. But just based on what they reported and what they've reported in terms of the bottom line, I could expect the stock to probably be in the red. Revenue is up around 2%. The street was anticipating a decline of 4%, so that's come in better than expectations. Margin 16.5%. Street was anticipating 15.7%. Loss has widened on a year-on-year basis. India did well. It was up around 13% year-on-year. US sales $91 million. Street was anticipating around $101 to $105 million, so a bit of a disappointment there. Call at 8:30 a.m. Torrent Pharma, good numbers. Revenue up 10%, margins 32%, in line with estimates. Profit 450 crores, again in line with estimates. India was up 10%, US was down 6%, Germany did well, was up around 11%, Brazil was up 17%. The company is also going to take shareholder approval at its AGM for raising up to 5,000 crores. But remember that they do this on a yearly basis. It is an enabling resolution, but nonetheless something to take note of.
All right, Ekta, thanks very much for that. Well, let's move on. Cochin Shipyard is the next one which reported earnings, and Upasana's got this one. Upasana, morning.
The company's reported a strong set of numbers in Q4 FY24. The revenue stood at 1,286 crores versus 600 crores on a Y-on-Y basis. EBITDA stood at 288 crores versus EBITDA loss of 68 crores on Y-on-Y basis. It is important to note that there was an exceptional item worth 64 crores in Q4 FY23. The margins for the quarter stood at 22.8% and PAT stood at 259 crores versus 40 crores on a Y-on-Y basis. So all in all, we are seeing a strong set of numbers coming in from Cochin Shipyard. Hence, I expect the stock to open in green today.
All right, thanks a lot for that, Upasana. Well, I'm looking at Hindustan Copper, and the street loves this one. It's been a big, seen a big outperformance. From the recent high, it's corrected close to around 8 to 9% odd. But these numbers actually look good. Top line more or less flattish, but the EBITDA number was up close to around 21%, and that's what took the margins to around 40%. That compares with around 33%. So that looked good. How did that happen? Employee costs were sharply lower. The consumption of power and fuel as well sharply lower by 20% apiece. So that was good news. And the profit number, well, that came in lower by close to around 6%, but that's because other income was much lower. Otherwise, operationally, these numbers look very, very good. Just to mention, the EPS for the last year was only around 3 rupees, so the stock trades at around 120 times. But the street is not looking about what happened in the past. They expect copper prices to move up, demand to also hold strong, and that's why, in fact, it trades at around the 370 rupees. So expect the stock to open up well in the green.
Okay, expect the stock to open up in the green. Sundaram Finance is the other one we're looking at this morning. Abhishek is here to give us a lowdown. Abhishek, how did it look?
Well, AUM growth was pretty robust over there, growing at 27.3% YOY and more than 4% sequentially. So the YOY growth rate is perhaps one of the best that you are seeing in last 6 to 7 years. P&L momentum, other income has aided earnings. NII, that is net interest margin, has been under pressure. NII growth of 20% YOY and 3.2% quarter on quarter is below the AUM growth rate that you are seeing. So my calculation shows that net interest margin might have declined around 30 basis points on a YOY YY basis and 5 basis points sequentially. Other income growth was robust at 78.7% YOY and 110% sequentially. Provisions also spiked up sharply, growing at 542% quarter on quarter and about 721% YOY. And in terms of asset quality is improved, so it might be that they might have taken a write-off in this quarter. PAT has grown by 60% YOY and about 68.7% quarter on quarter. As per IRAC norms, gross NPA ratio is at 1.98% versus 2.61% in the previous quarter. And the restructured book in absolute quantum has declined more than 24% quarter on quarter. So AM growth being healthy and asset quality improving, stock might be in green today. Back to you.
Okay, thanks a lot for that. So plenty of stocks really to remember today. But in case you missed any of them, here's a quick recap. Stocks with positive news flow, there's NTPC, Divi Labs, United Spirits, Aurobindo Pharma, Bosch, Torrent Pharma, Cochin Shipyard, Sundaram Finance and Hindustan Copper, while Glenmark is the only stock on our radar that's likely to open in the red. But there's plenty that's happening in the world of commodities as well, so let's get some quick action going there. Manisha Gupta, our commodities editor, is joining in. Manisha, hi, good morning.
Morning, Sonia. Well, the previous week was all about profit taking, but this week it started slightly on some opportunity buying on the lower side as well. Remember, it's a long weekend for US and the markets might see exaggerated moves on the back of lower volumes. But the crude oil prices, after declining 3% in the previous week and hitting a low at almost 80.65 for Brent, are back above $82. The markets are now looking at the OPEC and allies meeting, which is on 2nd of June, which would review production policy. And there are expectations that OPEC will continue to hold off some production to support the prices. As of now, it is 2.2 million barrels per day, which the voluntary cuts are at. Same is the case with the metals as well. Last week wasn't so great because we saw the gold prices fall by 3%, copper was down 2.5%. But right now in the Asian markets, we're looking at 1 to 2.5% of gains come back for many of these commodities. Well, a slight decline in US dollar also seems to be supporting, and markets really are in a mode where you are looking at buying on every dip.
All right, Manisha, thanks very much for that. So that's basically the commodity action, which we will revisit a little later as well. Well, let's take a break here. Prakash Devan will be with us with what he makes of some of the fundamental cues, earnings, which our team outlined. So we'll ask him how some of these stocks will react and what's to trade. We're back with that in just a bit.